Coinbase Global Inc, trading under the ticker symbol COIN, is one of the most closely watched stocks in the cryptocurrency space. As the largest publicly traded crypto exchange in the United States, Coinbase is uniquely positioned at the intersection of blockchain technology, regulatory evolution, and digital finance adoption. This investment analysis will take a deep dive into the company's fundamentals, financials, strategic positioning, risks, and growth potential in a rapidly evolving market. Make sure to like and subscribe for more deep dive investment content like this. Coinbase was founded in the year 2012 by Brian Armstrong and Fred Ursum, with the mission of creating an open financial system for the world. The company began by providing a simple interface for users to buy and sell Bitcoin. But over time, it expanded its offerings to include Ethereum, Litecoin, and hundreds of other digital assets. Its business model has evolved to include a robust institutional platform, staking services, a self-custody wallet, and developer APIs. Coinbase went public in April of 2021 through a direct listing on the Nasdaq, debuting at a reference price of $250 per share. On its first day of trading, it reached an intraday high of $429, briefly giving it a market capitalization of over $100 billion. Since its IPO, Coinbase stock has seen dramatic swings, reflecting the volatility of the broader crypto market. From its initial highs, the stock declined sharply during the crypto winter of 2022 and early 2023, falling below $50 at one point. This decline was driven by plunging trading volumes, declining cryptocurrency prices, and increasing regulatory scrutiny. However, with the rebound in digital assets starting in late 2023 and continuing into 2025, Coinbase has once again captured investor interest, rising alongside the price of Bitcoin and other major cryptocurrencies. To understand Coinbase as an investment, one must first consider the company's revenue model. Coinbase primarily earns income through transaction fees charged when users buy or sell cryptocurrencies on its platform. These fees are a percentage of the transaction amount and vary depending on the user's volume and transaction size. For example, retail users may pay fees in the range of 50 to 100 basis points, while institutional users pay significantly lower fees. In addition to transaction revenue, Coinbase generates income from subscription services such as Coinbase One, custodial fees, staking rewards, blockchain rewards, and interest on customer fiat deposits. In fiscal year 2023, Coinbase reported total revenue of approximately $3.1 billion, a decline from nearly $7.8 billion in fiscal year 2021. This drop reflects the decline in crypto market activity and asset prices during the prolonged bear market. However, in the fourth quarter of 2024 and the first quarter of 2025, the company posted a strong rebound in revenue and net income, benefiting from the rally in Bitcoin and Ethereum prices, which increased trading volumes and user engagement. In the first quarter of 2025 alone, Coinbase reported net revenue of over $1.6 billion and adjusted earnings before interest, taxes, depreciation, and amortization exceeding $800 million. One of the strengths of Coinbase's business model is its scalability. As a technology-driven platform, Coinbase can support significant increases in user activity with relatively modest increases in operating expenses. This gives the company significant operating leverage during bull markets. In contrast, during bear markets, when trading volumes decline, its top-line revenue and profitability can fall sharply. To mitigate this cyclicality, Coinbase has been focused on diversifying its revenue base, expanding into stable revenue streams such as subscriptions and services. Coinbase has also built one of the most trusted brands in the crypto space. Security and regulatory compliance are critical in the digital asset industry, and Coinbase has invested heavily in these areas. The company is a registered money services business with FinCEN and holds numerous state money transmission licenses. It also operates under the supervision of the New York Department of Financial Services and complies with anti-money laundering and know your customer regulations. This regulatory posture has made Coinbase a preferred partner for institutional investors and fintech firms entering the crypto space. A key part of Coinbase's growth strategy involves expanding its institutional offerings. Through Coinbase Prime, the company provides custody, execution, analytics, and financing tools for hedge funds, asset managers, corporates, and high net worth individuals. Coinbase Custody, which holds assets in secure cold storage, is one of the largest custodians of digital assets in the world. As institutional adoption of cryptocurrencies grows, Coinbase is well positioned to capture this demand. In recent months, the company has benefited from the launch of spot Bitcoin exchange-traded funds in the United States, for which Coinbase serves as a custodian and execution partner for several of the largest ETF issuers. Another significant growth area for Coinbase is blockchain infrastructure. Through Coinbase Cloud, the company offers APIs and developer tools for building decentralized applications, wallets, and smart contracts. It also supports staking infrastructure for proof-of-stake blockchains like Ethereum, Solana, and Polkadot. These services generate recurring revenue and help position Coinbase as more than just a trading venue. As Web3 continues to evolve, Coinbase's cloud and developer offerings may become a major source of growth. Coinbase Wallet, the company's self-custody solution, also represents a strategic hedge against regulatory and platform risk. With increasing interest in decentralized finance and digital identity, Coinbase Wallet allows users to control their private keys and interact directly with decentralized applications. Although this service generates less revenue today, it aligns with the broader crypto ethos of user sovereignty and could become increasingly important over time. From a balance sheet perspective, Coinbase is well capitalized. As of the end of the first quarter of 2025, the company reported over $6 billion in cash, cash equivalents, and USDC reserves. It has minimal debt and a conservative capital structure. This financial strength provides flexibility to invest in new products, defend against legal challenges, and weather future crypto downturns. Moreover, Coinbase has undertaken several rounds of cost optimization since 2022, significantly improving its operating efficiency. Its headcount has been reduced and expenses trimmed to align with market realities, improving adjusted EBITDA margins during the recent upcycle. Despite these positives, Coinbase faces several risks that investors must consider. Chief among them is regulatory uncertainty. The United States Securities and Exchange Commission has taken a more aggressive stance on digital assets, suing Coinbase in 2023 for allegedly operating an unregistered securities exchange. Coinbase has denied the allegations and is fighting the case in court. The outcome of this legal battle could have profound implications for the company and the broader crypto industry. If certain digital assets are deemed securities, Coinbase may have to delist them or register under costly and restrictive frameworks. Additionally, the macroeconomic environment and Federal Reserve policy impact Coinbase's performance. High interest rates tend to suppress risk asset appetite and reduce trading volumes. Conversely, dovish monetary policy and economic stimulus tend to drive speculative interest in crypto markets, boosting Coinbase's revenue. The company is thus highly sensitive to macroeconomic trends and investor sentiment. Competition is another factor. While Coinbase is a market leader in the United States, it faces intense competition from other centralized exchanges like Binance, Kraken, and Bitstamp, as well as from decentralized exchanges like Uniswap and SushiSwap. These platforms often offer lower fees and access to a broader range of assets. Coinbase's strategy of prioritizing regulatory compliance and security has helped it win trust, but it must continue to innovate to maintain its competitive edge. In terms of valuation, Coinbase stock is difficult to assess using traditional metrics. Because of the high volatility in its revenues and profits, it does not trade at a stable price-to-earnings or price-to-sales ratio. Instead, analysts often look at its enterprise value relative to adjusted EBITDA, or compare its market capitalization to user metrics and trading volume. As of June 2025, Coinbase trades at a forward price-to-sales ratio of approximately 7 times and a forward price-to-earnings ratio in the range of 20 to 25 times, depending on projected earnings. These valuations imply investor expectations of strong growth and profitability as the crypto bull cycle continues. Looking forward, Coinbase's investment potential will hinge on several key factors. First is the trajectory of crypto adoption. If digital assets continue to gain mainstream acceptance, Coinbase stands to benefit enormously. Second is regulatory clarity. A favorable, or at least workable regulatory framework would remove a major overhang on the stock. Third is product innovation. If Coinbase can build compelling new services beyond trading, such as stablecoin payments, decentralized identity, or tokenized real-world assets, it can unlock new revenue streams. Finally, its ability to retain and grow its user base amid competition will determine its long-term success. Coinbase is one of the few publicly traded ways to gain direct exposure to the crypto economy. For investors bullish on the future of digital assets, blockchain infrastructure, and financial decentralization, Coinbase offers a compelling, if volatile, opportunity. It combines strong brand equity, regulatory credibility, a diversified product suite, and a war chest of capital to navigate the market's ups and downs. But it also carries meaningful risks, especially from regulators and market cycles. For those with a high risk tolerance and a long-term investment horizon, Coinbase could be a worthwhile addition to a diversified portfolio. As always, investors should conduct their own due diligence and consider how a stock like Coin fits within their overall strategy and risk appetite. Make sure to like and subscribe for more in-depth investment breakdowns, stock analyses, and financial strategies to help you navigate the markets with confidence.